Folks, I'm going to address an interesting question I received in the comments below and then get into the latest home prices and insights for York Region for week ending May the 10th, 2023. So here's the question. I was asked, have I seen many sellers have a difficult time get back into the market after they've sold? So there's different ways for me to address this, and I find this a really interesting question. So first of all, if the plan is to sell and then buy around the same time, it should work out okay. My experience is for most sellers and buyers that are doing it at the same time, it works out. Now it's really, really crucial that you know the numbers ahead of time. What I mean is, look at what you'd like to buy, look at the neighborhood you'd like to buy in, have a really, really good idea of what it's going to cost for you to buy the kind of house you would like. Then you really need to know what your home is going to sell for, how much money would be left in your pocket after all closing costs. And those people that have those numbers and have figured it out and know what they're getting into, it usually works out. And that's when they are selling and buying at the same time. But I have a feeling the way the question is worded, that's not exactly what the person is asking me. I think it's more of they've sold and now getting back into the market at a future date. Meaning, you sell high and you buy low. You sell today, you wait, and then at some point in the future when the market is much slower, you buy back in. I think that's really the root of the question. And if that's the way it is, then I got to say, look, in theory, strategically speaking, sounds like a great plan. And it makes sense. Sell when the market's high. When it's low, buy in. How much? You've done great. You've solved the mystery of one of the mysteries, how to make money in real estate. Sell high, buy low. The reality is, doesn't really work out that way. I have lots of different experiences with people doing the exact same things. Many times I'll meet a buyer or they'll call me to help them buy, and when I hear their story, they sold 2, 3, 4, 5 years ago with that exact plan. We sold when the market was high. We've been trying to get back in ever since. It hasn't worked. Most of these people can't afford to buy back the same house they sold. The price just kept going up and up, and when it come down, it really didn't come down enough. They had to wait more, and then it started to go up again. And you just find yourself in this cycle where the market gets away from you. So in theory, it makes sense, but not really. I know one client that it worked out for where they sold high and bought back in low, but here's their situation. They sold because they had a job out of the country. So they left the country for 1.5 years. When that job was over, they came back. And so when they sold, it happened to be a really high time in the market. And when they came back and now needed to buy again, it just so happened that it was a low point and it worked out really well for them. But purely by luck and coincidence. It wasn't some master strategy. But I find those people that try to plan it that way, it really doesn't work out. And it's really, really a tough thing to do. When you look at my charts, it's really easy to see when you should have sold and when you should have bought. But that's looking into the past. By doing this kind of strategy, you kind of got to look into the future, and nobody can really accurately predict when's the right time to do that. So be careful if those are your plans. I'm just going to add one more thing to that plan. These people that have sold and now are sitting on a windfall of money because they've done really well with their sale, the money sitting in their account, let's say they've done extremely well. They have $1 million sitting in their bank account. They look at that, and you really, really got to be so financially prudent to get that $1 million to grow. Because what a lot of people end up doing is, while they're waiting for the market to come down, they keep seeing that $1 million. And never mind the fact that money on its own just sitting there is going to lose value. Well, a new car, the place you're renting out is not going to be, some little tiny dive somewhere, a one-bedroom little tiny bachelor place. You're renting a decent place. If you've got a family, you're going to spend $4,000 or $5,000 a month, $6,000 a month renting a decent-sized place. There's, $50,000, $60,000, $70,000 a year going out just on rent. Maybe a vacation or two because you worked so hard all those years to build up the equity. All of a sudden, that $1 million, when it's time to buy, is not $1 million anymore. It's much less. That complicates the whole buying back in and what you can afford now. So there's other aspects to just timing the market. It's actually keeping all the money that you got and getting it to grow, hopefully. So be careful if that's your plan. It sounds logical, sounds like it would make sense, but in reality, next to impossible to actually fulfill and make happen the way you're seeing it in your head. If you think this video can help somebody please pass it along. If you get value from what I'm talking about here, subscribe. If you want to speak with me about your real estate situation, selling, buying, it's really simple. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you. We'll talk about whatever's on your mind. Let's get into the numbers. So how do you time the market? Good luck. I got to tell you, it's really easy to say, really, really difficult to actually in practice accomplish. For those people that it's worked out for, hey, let me know in the comments below. Did it actually work out for you where you sold high, waited a certain amount of time, and then timed it where you bought in? And be honest, was it lucky that it just happened? Was it coincidental, or did you really pick the right time? And for those of you that tried and it didn't work out for, also let me know in the comments below. Let's get right into the numbers. I'm going to start off with Vaughan. This is for detached properties only, broken down by week for a whole year. 37 detached properties were sold. I put a question mark because what happened? Sales came way down from the previous week. Looked like we were climbing up in sales, and now we're down by quite a bit from what we've been selling the last few weeks. So 37 detached properties were sold. 13 of those were at $2 million or more, and 13's been pretty consistent now for 3 weeks. Average sold price climbed up to $1,922,000. Peak pricing was for the month of February. Now, I'm using the month to get the average for the peak price. I'm not narrowing it down to just 1 week. So the month of February last year, 2022, was peak pricing at $2.225 million. We are 14% lower right now than what we had when we had our peak pricing. However, 1922, the current average sold price for week ending May the 10th is almost exactly the same, off by less than a percentage point of where we were this time last year. So we got rounded, we got a 0% change in average sold price. The median price of 1805 is also 0% change year over year, and both median and average price are trending upwards for the last 3 months. And I'm looking at the dotted line, which is a 4-week moving average. Of the 37 that sold, 62% sold at list price or more. And that percentage has been climbing. We're in the 30, 40s, then 50s. Now we're at 62% selling at list price or more. Listings, pretty consistent. We listed 75 last week. And months of inventory climbed up a little bit, now sitting at 1.2 months of inventory. 11 is the average days on market. So properties are moving pretty quickly. Here's Richmond Hill. 35 detached properties were sold. 13 of those sold at $2 million or more. Peak pricing for Richmond Hill was February 2022, and it was $2 2,156,000. That was the average price. That's the highest that we've ever had. We are only 2% lower than peak pricing where we were February last year. But 2,133 for the current week we're in is actually 3% higher than where we were this time last year. 1.8 is the median price. So average price is 3%. The median price did take a dip this week. It's 13% lower. I wouldn't read too much into that. It's just when you look at things week by week, things sometimes are a little bit wonky. They do go up and down quite a bit sometimes. But looking at the 4-week moving average, looks like prices are kind of steady for a little while across Richmond Hill. Of the 35 that sold, 69% sold at list price or more, which is kind of getting up there. 53 were listed. Months of inventory came down to 1 month of inventory. 13 is the average days on market. So 1 month of inventory, pretty tight. 69% selling at list price or more. It may seem that prices are kind of stable, but when you look at the overall picture, prices have been overall trending upwards over a bit of time. Here's Markham. 35 detached properties were sold. 11 of those were at $2 million or more. I drew a line. It just seems, man, the prices, we had the low point was back in December, and prices have been just going one way when it comes to Markham. Average sold price right now is $1,916,000. Peak pricing was also February last year, 2022, of $2,134,000. We are 10% lower than peak pricing right now. Compared to a year ago, we're 4% lower than where the average sold price was a year ago. Median price is 3% lower than where we were a year ago. And looking at the dotted lines here, the 4-week moving average, prices over the previous 2-3 months have been trending upwards. You know, I compared to last year, I compared to peak. But if you're looking to transact, if you're looking to buy or sell and you're really interested in knowing what's happening in real estate, the trend that we're on right now, doesn't matter what happened a year ago, 2 years ago, the trend right now really is the most important data that you should be looking at right now. And right now, prices are trending upwards. Of the 35 that sold, 83% sold at list price or more. So between the 3 cities, Vaughan, Richmond Hill, and Markham, Markham is by far the most competitive. You're going to see more and more homes selling with an offer date. Even the ones without an offer date, there's going to be competition still on those homes. 83% selling at list price or more. 70 were listed, and months of inventory sitting at 1 month of inventory. Average days on market is only 7. Things are moving very quickly in Markham. Here's the condo market. This is for all of York region. 69 condos were sold. As far as a weekly basis go, that's the best week we've had in a while, in over a year. 4 of those were sold at $1 million or more. Average sold price climbed up from the previous week, sitting at $731,000. And you could just see the trajectory of average sold price has just been climbing steadily since December. Peak pricing for condos was February 2022 at $795,000. The current average sold price is 8% below peak pricing a year ago, February a year ago. Compared to the same week last year, $731,000 is 9% lower than last year's average sold price. The median price of $685,000 is 6% lower than where we were a year ago, and prices have been trending upwards. Of the 69 that sold, less than half, 44%, selling at list price or more. So it's, I'm going to say, somewhat competitive. Nowhere near the kind of competition, the kind of aggressiveness, let me say, that we're seeing in the freehold, the detached market. But condos, still, it's not like every condo is going to be selling at list price or more and you got to compete, but close to half, 44%. 127 were listed, and months of inventory sitting at 122 is the average days on market. Here's a quick summary of months of inventory. They're quite low. We're very much in a seller's market. Now, I gotta say, I've been thinking about this for a while now. We've been saying, because it's kind of the industry accepted norm, that anything below 4 months of inventory is a seller's market. And when we're this low, it's an extreme seller's market. However, we've seen it in the recent past that as soon as we start to when months of inventory starts to climb, and we saw it last year when we're in the decline, as we get to 2.5, 3 months of inventory, it's the characteristics of the market at around 3 months is what used to happen at 4 months, where prices are kind of flat, kind of stable. That's more of a balanced market. So in my head, I'm thinking 3 months of inventory is really the new 4 months, because as these start to grow at some point, once the 1 month of inventory get to 2, 2.5, and 3, it's like a huge relief out there in the market for us. And that's when you're going to see it more of a balanced market. So I think I'm going to be changing all my charts to 3 months of inventory and below is a seller's market. Above 3 months is going to be more of a balanced market. I'm going to change that in the future. Thanks for watching. I appreciate your comments below. Have an awesome day.